I'm not a financial advisor. This is not financial advice. Please do your own research. Welcome to the Vinny G Markets channel, brought to you by Vinny G Money. Straight off the back, this is going to be a shorter video. There are a lot of moving parts in the market right now, and I just want to shortly cover the things that are going on. So we're not really going to be pulling up all these articles and charts like we normally do. This is going to be more one-on-one. Let's get right into it. The biggest story in the media right now is Silicon Valley Bank. I haven't done my proper research, but they're going bankrupt. I'm pretty sure they're bankrupt. And just to put this in perspective, Silicon Valley Bank, it's the 16th largest bank in the United States, so it's not no mom and pop, but we're not going to spend that much time on this. Reason being, it's not because it's not important or not significant what's going on, but it's because we've been continually speaking on this channel about the Federal Reserve raising interest rates, and it was only a matter of time for it to hit the economy in some type of way. And you also have to take this into perspective. When the Federal Reserve raises their interest rate, it doesn't hit the economy until 6 months later. So we're only currently experiencing the interest rate raises that took place from March 2022 to September 2022, where the interest rate was about 2.5%. All the interest rate raises from October 2022 till present day aren't even baked into the economy yet. We're at about half right now, so we have another half to go on these interest rate raises. And what the media failed to report, or report as much as Silicon Valley Bank, is that the Federal Reserve spoke this week. Uncle Jerome got up there and said, as usual, like we've been saying on this channel, is that he's going to continue to raise interest rates and expect higher rates for a longer period. And this is still all at the same time the Federal Reserve is trying to run off their balance sheet. As you see, their balance sheet has actually decreased as well. So the reason why we're not surprised at things like Silicon Valley Bank is the raising of interest rates at this pace off a period of time where you were just printing and giving free money out to everybody is going to affect companies like Silicon Valley, because most of their companies were these smaller companies like in Silicon Valley, those high-tech innovative companies, and they were flush in Silicon Valley with all types of cash. Now Silicon Valley Bank, they had to do something with this cash. I guess they thought they were doing the safer thing and invested a lot of that money into like longer term treasury rates. The rates were near zero at that time, and because the interest rates are now rising at this pace, they're sitting at those bonds at a loss, which is what caused the bank to go bankrupt. And all the regulators, the world leaders, whoever it is, they're going to tell you it's a contained situation, like they told you it was contained in 2008. The same way they said all this printing of money is not going to cause inflation. The same way they told you inflation was transitory. The same way they told you there was going to be some type of soft landing. And you just hear lie after lie after lie. But again, here on the Vinny G Market channel, we don't even care about that. We know they're lying. We know what to look for. And we just going to be out here trying to take advantage of the situation. There's no reverting back from this. All this is being done to usher in the new digital economy with central bank digital currencies. I'll even try to put a video at the end of this to explain why central bank digital currencies is basically the end game. But that's what's going on right now. They're purposely destroying this financial system to usher in the new system. So you can't be shocked at things like this when companies start going under. But all that's going to happen, like in the Silicon Valley Bank situation, is that the bigger banks, they're just going to take any good assets this bank has and put it on their balance sheet. All the bad assets, it's going to be stuck with the shareholders. It's going to go to somebody. But the big banks, they're just going to take all the good assets this bank has, and they're just going to get bigger and stronger. And you're basically going to have more consolidation in the financial markets where you just have less players. So when the new digital economy gets ushered in, it's just going to be a bunch of big banks with the Federal Reserve. You're not going to need all these regional banks because you're going to have a digital wallet, and that digital wallet's going to be directly connected to the Federal Reserve, which is absolutely crazy. So all we focused on though is the Federal Reserve. Are they going to continue to raise interest rates, this and that? What's the Fed going to do with interest rates? And the next biggest piece of news in the media that they barely reported this was the last jobs report. It grew more than expected. You could go back to our Federal Reserve warning shots video. The Federal Reserve is going to continue raising interest rates until people start losing their jobs. So the Federal Reserve, they're nowhere close to pivoting. They're telling you higher interest rates for longer. Even when they eventually stop raising interest rates. They're going to keep them elevated for an extended period of time. The same thing like they did when they were printing all this money. They were doing everything for overly extended period of time because, again, they want to mess the economy up to destroy the old financial system and usher in the new one. And as long as the Federal Reserve continues to raise interest rates, it's going to hurt the bond market, specifically the corporate bond market, because as interest rates rise, the face value of a bond, it goes down. And these financial institutions are doing the same thing they did with mortgage-backed securities back in 2008, but with corporate debt. They're taking corporate debt, pooling it together into a totally separate product called the CDO, collateralized debt obligation, and they're selling it to investors. And who's been a big buyer of corporate debt? It's been pension funds. Of course, pension funds, they normally wouldn't invest in such risky assets, but because the Federal Reserve has been keeping interest rates so artificially low for so long, there's no other place to go for somewhere like a pension fund to place their money. They can't get any return on a US Treasury because the rates are so low. You can't put all the money in the stock market. Corporate bonds would be the next best thing, which was fine during the time period the Federal Reserve was just printing out all this money, but as we know, that's changed, and that's what we're seeing now. And also understand that Social Security, they've been running out of deficit since 2010, and their deficit has only been compounding only faster as more years go on. So unless somehow Social Security could defy the laws of physics, they're not going to be around. They just can't function at deficits like this. At the same time, 401ks are going to get drained because the stock market is going to continue to get hit over time. So you're going to have a situation where no matter what you're retired on, you're going to have issues, and the solution is going to be universal basic income, UBI. There's going to be more UBI programs going forward, and what comes along with that are the central bank digital currencies, CBDCs, and we know that's the end result because we know that's going to be used to usher in the new digital economy, which is the end goal for the Federal Reserve, NWO, reptilian race, whatever y'all want to call it. And the biggest piece of news that was severely underreported by the media while all the Silicon Valley Bank stuff was going on is Saudi Arabia, Iran restore relations and deal brokered by China. And you could go back to our market manipulation at its finest video to get more of the backstory, but Iran and Saudi Arabia, they were more or less enemies, and Saudi Arabia would use the United States for protection from Iran, and this would keep Israel happy because they would then get somewhat, I don't know the full story, but they would be, I guess, cool with Saudi Arabia. This would be changing everything. You have Saudi Arabia with Iran, with China. This is only going to increase global conflicts. It's starting the currency wars because Saudi Arabia has heavy power in the United States dollar due to the petrodollar deal, and we all know the digital yuan, that's the currency that's rising from these emerging markets. So you see everything starting to take place. That's why when you see escalations, we're not surprised here on the Vinny G Markets channel, whether it comes to global conflict or issues in the credit market or the stock market going down. It doesn't matter because we're anticipating a lot of things that are happening that people are considering crises, but we've seen from a mile away. But we also know the Federal Reserve is just going to put band-aids on these problems, just kicking the can down the road, but at the same time creating market pumps. They're not going to make it where the market just goes down. That would just make it too easy for people to make money. So we're still going to have our market pump and dumps. You could look at the interest rates to see where we're going. Interest rates actually fell while the market fell, so I wouldn't be surprised if we see a pump. But you know what we're doing out here. We've been staying in energy. We've been saying tech is going to get hit as interest rates rise. We're holding on to crude oil because we know these global escalations are coming, especially with China, Saudi Arabia, Iran all on the same time. Toss Russia in there too. That's why we're holding on to the food ETFs. Again, we went over this in our prior videos. We're treating our portfolio like we're hoarding for global apocalypse, and that's just how we're moving going forward. I want to make future videos on how maybe certain percentages of our portfolio need to be allocated to certain things. Again, this is the Vinny G Markets portfolio I speak of. You need to do your own research, and we all have different goals, but maybe do videos like that. Also, you see what we're doing on the Instagram, and that's one thing too. For the next 2 or 3 years, as this new economy gets ushered in, there's going to be a wealth transfer going on. The only way for you to get ahead of it is you're going to have to earn more money. Saving, it doesn't look like it's just going to be enough. People can't save anyway, but if you're able to earn money while most people are getting their income decreased, that's what's going to put you on the right side of this wealth transfer. I want to see everybody come up. That's why I got the Vinny G Markets channel. We got the Instagram up there. We ain't got no Discord, no paid Patreon, all this information free we putting out. But the only scheme I got for people is trading options. Again, I'm not saying it's the best scheme, but I would try learning this stuff, again, instead of watching TV shows and whatever else you're doing, you got to put your research in on this. You got to find another way to make money. If you don't like options, you just got to find another way, but you have to allocate your time properly in a way you're going to learn a skill to earn you more money. And that's why Vinny G Markets, we staying in the lab working on this options game. You got more information on that on the Instagram. I'm going to try to keep the channel and the IG separated. Maybe going forward, we're going to do different types of videos anyway, where we maybe integrate the two. But you see what we doing. We trying to flip these options, take those profits. You could allocate it any way you want in your portfolio, and you're not going to care about the short-term losses because it was basically free money anyway. Also, for luxury items or things like going away, it's just a lot easier if you could earn that money from some type of passive income, something outside working the 9 to 5. Your 9 to 5 job should be used for things like survival, like food, shelter, things like that. Anything leisure, luxury, you should be trying to get it from some type of passive income. And here's the disclaimer, this is all easier said than done, especially talking about options. Options are extremely difficult. It's nowhere near free money. It takes tons of research and dedication. It's a separate job within itself, especially if you're trying to learn, but it does have its benefits. You got no boss, there's no overhead. All you do is pay commission fees. If you got a laptop, a phone, Wi-Fi, that's all you need to get involved in this game. So if you're looking to stay scheming out there with Vinny G Money, trying to get this paper at any which angle possible, come mess with your boy. If you like what you hear, Hulk smash that like button. And as always, I'll leave you off with this. The God of the Bible, the God of Abraham, the Father of our Lord and Savior Jesus Christ, is real, and may he bless you.
I want to get in some on central bank digital currencies. You talk a lot about it in the book, the coming of CBDCs. How far away are we from that reality, and your thoughts on central bank digital currencies?
I don't know, 1-2 years, something like that. I actually hope they're a little bit late so that the crisis comes before then, because this would be the method for them to get everybody into it, and then you're trapped. Once we're all using central bank digital currencies, right now, they inflate the currency supply and they transfer wealth, but if they scare people too much, you can go into other assets. Well, once they've got central bank digital currency, if they don't want you to buy gold, they just won't allow you. The currency won't buy it. The currency is programmable. They can control almost every aspect of your life once we get on any programmable currency, where they can, if they don't like you, they can make it so that you can't spend any currency within a 5-mile radius, outside of a 5-mile radius of your home. If they don't want you to travel, you won't be able to buy airline tickets or take an Uber or pay for a hotel room. And once they get you into this, now I should have prepared and had this little bill, but in Taiwan, they came out with a note that was a temporary note to stimulate the economy. They printed a whole bunch of currency that had an expiration date on it. And so as it starts reaching its expiration date, nobody wants to hold it. Velocity picks up, but the value of its purchasing power diminishes. They can do, if they think they need to stimulate the economy, what they can do is punish you by charging you 10% on your savings. And if you notice your savings vanishing at this amazing rate, you're going to spend it before it vanishes. So they can cause, this is the one area that the Federal Reserve and the currency creators, they don't have direct control over it. That's the emotion of the public is what controls velocity, whether or not you feel good enough to go out and spend. So if they want you to go out and spend, they'll just punish you if you don't.